Well, hello and welcome to this Moneycontrol live session. I'm Nandita Khemka and with me is my colleague Santo. And we will be talking about the hot topic, that is the Nykaa's bonus issue and the kind of sell-off that we've been witnessing on the shares of Nykaa over the last few days. Now, Santo, the shares went ex-bonus on the same day that the anchor lock-in ended, which was on the 10th of November. Now, since after that, we did see a 19% surge come in on the stock, but as soon as the bonus shares started hitting the investors' accounts, we've seen the stock come under a fair bit of selling pressure, and now it has shaved off as much as 20% from the shares. Now, did the board really fail to read the situation correctly, because looks like the move has completely backfired?
Well, yes, the timing of the bonus issue clearly has led to a lot of chatter in the market. It almost seemed to have been done with an aim to at least reduce the selling pressure in the stock, which usually happens whenever the lock-in period for pre-IPO investors ends. We saw that in the case of Zomato. Now, you mentioned that brief spike in the stock price. That was mainly because of this perception that probably the Fed will now start easing on interest rates, and overall that generally when interest rates come down, that's a good thing for technology companies. But that said, there are some other issues here also, mainly that a lot of these pre-IPO investors, the acquisition cost for them is very low. That being the case, they would definitely be tempted to book profits, and that's what we are seeing at this point in time.
Right. Santo, do you think the fundamentals of the company justified that it comes out with a bonus issue at this juncture?
Well, most of the times bonus issues and fundamentals are not really connected. Bonus is more a way of companies to kind of make the stock more attractive to retail investors. Here too, something similar would have been the objective. Now, but if you say the fundamentals of the company, whereas I'm talking about the operating performance here, when Nykaa had come out with its IPO at that point in time, new age companies were the rage. So they could ask for any kind of valuations and they could get it. But over time, now the market, the investors are getting a bit impatient and they are not willing to give the same kind of valuations which they gave at one point in time. So there is, I think, where the issue actually is. The profit growth has not been as much as what the investors probably hoped that it would be, and because of that we are seeing some kind of selling pressure in the stock.
Right. Santo, another thing that I wanted to ask was, who is the one who stands to lose most out of this entire episode of anchor lock-in ending, bonus issue, and shares first spiking up and then like coming down with a thud? So who's the one that stands to lose the most?
Probably the investors who have gotten post listing, they would stand to lose some bit. Again, that's depending on whether they sell the shares or not. So when you sell one share, your original holding, right, you'll book a capital loss on that. That's fine. But the bonus shares which are issued, you still have to pay capital gains tax on them when you sell them, 15%.
Yes.
So that probably would have caught a lot of retail investors off guard. For those who are sitting on a very low cost of acquisition, it really wouldn't matter much. They've been holding for a long time, and maybe 10% lower than what they thought is still okay. But let's not forget, they're still sitting on huge profits. But that's not the case with many people who may have bought in, let's say, a year back. Right? Already the stock price has underperformed quite a bit. So this whole episode kind of has left a bad taste.
Right. Do you think this entire bonus issue episode will bring to the fore some kind of corporate governance issue for Nykaa? Well, because typically bonus issues do tend to move the share prices up a bit, and market was of course anticipating a fair bit of sell-off on the stock, because the anchor lock-in period was also ending on the same day itself, right?
Well, corporate governance in that sense would be a bit of a strong term there, because there's nothing illegal, right? Companies are free to announce bonus issues, which is what Nykaa also did. But when you tinker with the record date such that then it coincides, then your intent is kind of to manage the stock price. Whenever the company board focuses more time on trying to manage the stock price, that is not taken too well by a section of the market very clearly. So I think that is probably where the company would have certainly drawn some bit of negative publicity. There's going to be some kind of a perception change, because Nykaa was seen to be something apart from the rest of the new age businesses, but by doing something like this, I think it's seeded some bit. It has seeded some bit of some bit of moral ground there. Is how I would like to put it.
Another stock that is under quite a bit of pressure today is Paytm. The anchor lock-in has ended today. SoftBank has reportedly sold somewhere around $200 million worth of shares. Now, in light of all these companies, anchor lock-ins ending, and these companies coming under a fair bit of pressure already, they had come off quite a bit from their IPO price. What are some of the other red flags that are emerging for some of these new age tech companies?
Well, I think now the market is, investors are getting a bit choosy. Earlier you could say that yes, companies could say I'm going to make losses for the next couple of years, and investors would say yeah, fine, that's okay. But suddenly they're saying no, show us the profits. So in the case of Paytm particularly, since you've mentioned it, they've managed to narrow down the losses. Now that is
Vijay Shekhar Sharma has said that the company is already on, I mean, it is on path to the profitability.
Yeah, but
there is some visibility on that now.
Right, so they may narrow down the losses, but in terms of absolute profits, how much will they be able to make? That probably that is what the investors are focused on at this point in time. So just narrowing your losses or narrowly managing to break even may not be good enough. So unless these companies show any substantial improvement in their earnings, I don't think perception for them is likely to change. So you could see some bit of trading opportunities. Probably the pessimism gets overdone. You see the stock price fall sharply for a while. From there, people, some investors may see value. You could see a bounce back. But besides that, kind of a sustained uptrend.
So those will be temporary. Any kind of bounce back now would look to be a little
very hard to see how they can sustain beyond a point, because investors clearly are becoming more demanding. So a longer term uptrend looks very unlikely till these companies are able to demonstrate a substantial improvement in their earnings performance.
Right, so that's the word from Santo. Sustained up move may not be possible for most of these new age tech companies till the time that they come to this path of profitability in a decisive manner. Well, thanks a lot for joining us on this live session. For more news and updates, stay tuned to Moneycontrol.
Thanks, Nandita.
Thank you.